The honor is mine. And, this is a website that's been around for a long time. We'll get into that in a minute, but I just want to say, I'm just so grateful to join you guys. When I found out what you were doing, I think I connected through Josh Brown, a mutual friend of ours. I said, these guys are birds of a feather. We're all about financial literacy. We're all about financial education, investing education, giving people the tools to learn how to do it so they can build a lifetime of investing and growing their wealth. That's what you guys are all about. It's a super honor for me. And I'm delighted to be here and representing Investopedia. So thank you.
No problem. No problem. So let's get into it. I mean, we're going to talk about the Square situation. So you want to talk about it?
Yeah. I mean, so if you were sleeping under a rock today, Square, or last night, Square acquired Afterpay for $29 billion, which is interesting because from a financial company like Square or fintech company like Square to have an Afterpay component to it, it changes the game tremendously.
Can you explain what Afterpay is to people?
You guys want to go? Yeah, go ahead, Caleb.
Sure, I'll take it, and then Ian can take it. And happy birthday to you, Ian.
Thank you so much.
Buy now, pay later. So it's basically layaway, in the digital world. And it makes a ton of sense if you're a payments processor like Square, thinking about what they do on the front end and on the back end. You want to have that back end component so people can lay away. And we're going to see more and more of that as we get deeper and deeper into e-commerce. But Square has really circled the entire ring in terms of being the payment processor of the future. A few others have done that as well. If you've been watching this space as closely as I know you guys watch it, Square's really got it covered. They got it covered into crypto. They got it covered now in the buy now, pay later world. They got it covered in the front end. When you walk into basically any store, you're using their device. Pretty smart company, was way ahead of all of this.
Yeah, absolutely. This reminds me a lot of maybe 2010 to 2011 in social media. I think Afterpay would be one of the biggest steals of this decade. Like the integration that they're going to have. Customers already love it. Business. I mean, if you guys go back 20 years, fortunately, we're old enough to remember when payment processors were almost like scam artists. Square's made it so easy for everyone to be able to transact. This is the steal of a lifetime. And once again, I think Square would be like the JP Morgan of this era.
Yeah, sure. A wise man once said that. And it also has helped the space, right? We watched a firm go up 10% today. Mm-hmm. Another one of those buy now, pay later, or pay over time companies. And so it's interesting what one move can do for the rest of the fintech space.
It's interesting that you say social media because, Square, it's following like Facebook's blueprint where like Facebook brought Instagram and then they brought WhatsApp. Mm-hmm. So now, of course, Cash App and now Afterpay. So Square is positioning itself, as Ian would say, to be the next JP Morgan of the digital world, the next 100 years, the fintech company of the future. So, this is something. How do you think that traditional, I'll ask both of you guys, how do you think that traditional banks are going to, adapt to this? Because Square is making a lot of moves in the digital space. And it's interesting to see like, Chase or, Bank of America, how they're going to actually be a little bit more nimble on their feet.
I think they're just going to buy their way into it. These banks are flush with cash. A lot of them had seen some 52-week highs or record stock prices just in the past few months as financials have really rallied. Everybody's got a ton of money, a ton of venture capital. So they're going to buy their way into it versus build their way into it. Building takes forever. And if you've seen even just the last couple of years with the free trading, that Robinhood kicked off and then all of them got into that, they bought their way into it. So the Morgan Stanleys bought their way in through E-Trade, the Schwab and the TDA. So you're going to see big banks just acquire some of these other payment apps and some of these DeFi companies just so they can build that little galaxy around themselves. I'm glad you brought up the Facebook analogy because remember when Facebook bought Instagram, the price tag seemed really high at the time. And the same with WhatsApp. And everyone was like, that seems high. That seems like a joke right now. And I think we're going to say the same thing about Square and this purchase here, because in a few years, it's going to be like, that's the only way this is done. And whatever they paid in that transaction, it wasn't as big as the 26 billion. It was, a few billion plus the assumption of some debt. It's going to look like the absolute steal of the year.
Yeah. And it wasn't a cash acquisition. It was more, I think, all stock, correct?
Right.
Yeah. So
a little easier for them to do. Their stock super inflated right now.
Exactly. Yeah. And Caleb, you brought up a company, you said Robinhood, and I'll take your thoughts and Ian, your thoughts as well. So Robinhood IPO'd last week, and an interesting thing came out. The statistic, I think 1% of the people who have active accounts on Robinhood actually bought into the IPO when it debuted. 1%, which is pretty alarming if people have been using it and don't believe in the company. What's your thoughts on that?
You want to go first, Ian?
Yeah, Caleb, take it first.
Okay, my thoughts on that is those customers had a 30-day lockup on that trade. So you couldn't sell your shares until the stock had been trading for 30 days. And my perspective is that I think a lot of Robinhood's customers don't get down like that. They don't want to be told how long to hold a stock or when they can buy or sell a stock. We saw how upset they got when GameStop was halted, when AMC was halted back earlier this year. So they don't like to be told what to do. But also, when you look inside the Robinhood accounts, and I admire what that company has built and the fact that they've grown so fast and they do provide a very useful service. At the same time, they have a lot of accounts that have $1,000 in them that don't trade at all. So they got like that gym membership issue where a third of the gym memberships out there are barely ever touched. You know how that is. People buy your courses. Sometimes, they don't open them. People just don't open the things that they pay for, and they open Robinhood accounts thinking they're going to go all in, but actually don't. So maybe they don't have the conviction of real traders who want to believe or not believe in that company going forward.
Yeah. And on top of that, there are some pretty savvy people that use Robinhood. So a lot of them are waiting 60, 120 days to look to buy in. I think that could be one factor as well. But also, we talked about it a couple of weeks ago. I think Ben Carlson said that like 47% of the users open the app daily. I think that's way more important metric than how many bought into the IPO. But I don't traditionally like brokerages, but I think they could be a huge disruptor in the space. And I think the stock may end up actually doing pretty damn well. Like once they pay the fines, and if you think about it, if you walk in, mind share is always a key measurement for me. If you walk up to 10 people and ask them, hey, I got a tip on the stock, where can I buy it? 7 out of 10 is going to say Robinhood. And despite all the work E-Trade, TD Ameritrade has put in, Schwab over these last 30, 40, 50 years, the amount of mind share that they've acquired over the last 2 or 3 years has been absolutely phenomenal.
Yeah, I thought it was interesting. I wasn't even mad at it, right? Because when I saw the 1%, I'm like, wait, maybe they're paying attention. Because we've been stressing when something IPOs, give it maybe 6 months to settle, let the price settle. And so when I saw the 1%, I'm like, all right, interesting. But also in the same sense, it was like Robinhood. We know people, there's a Robinhood community and they want to push the stock. I was like, hey, let's see if they try to push this thing and let it run up. So I'm on the fence with it. I think it's interesting. It's a fascinating company from that position.
Absolutely. And I think it's going to be around for a long time. Sorry to interrupt real quick. The other thing is that, they're backed with a ton of venture capital. Don't forget Facebook, when it went public, it took a while for it to get above its IPO price. Yeah, look at it now, right? Uber, a company everybody knows and a lot of people use pretty darn frequently. I don't know if that stock's ever retraded above its IPO price. So this happens. It takes a while for companies to gain that public trust and traction. So you might be onto something with that, and we'll have to see.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.